Hey everybody, welcome back to the channel. If you're into tech, investing, or just keeping an eye on how the future of AI and cloud computing is shaping up, you're going to want to stick around. Today, we're diving deep into a company that has been making serious headlines. Alphabet Inc., ticker symbol Google. We're talking 7 key things you absolutely need to know about this stock before the market opens on November 24th, 2025. Trust me, there's a lot happening behind the scenes that could impact your wallet. So grab your coffee, settle in, and let's get into it. Alright, first, let's set the stage. Why should anyone care about Google right now? It's not just any tech stock. Alphabet is one of the largest companies in the world. It's got search, advertising, cloud, AI, basically the building blocks of the modern internet. Over the past year, interest rates went up, the economy turned volatile, and tech stocks got battered. But Alphabet, it's held up surprisingly well. Why? Because it's diversified and has serious growth drivers beyond just ads. That said, with great size comes great expectations. The market has already baked in a lot of optimism. So, for investors, the question isn't whether the company is good, it's whether the timing lines up. Number one thing you need to know, Alphabet's Q3 2025 earnings were solid. Revenue came in around $102.3 billion, beating expectations. EPS came in at $2.87, well above the anticipated $2.27. That's meaningful, especially in this environment. It shows the company can execute, but it also raises the bar. When huge companies deliver beats like this, the market starts asking, can they keep doing it? The second big thing is AI and cloud momentum. Alphabet isn't just talking about AI, they're building the next generation of it. Their Gemini 3 model has analysts saying wow, and not ironically. Their cloud segment is growing double digits, which is big for a company of this magnitude. It signals something important. Alphabet is no longer just an advertising company. They're building entirely new revenue streams. But high expectations also bring high pressure. Investors expect this momentum to continue. If it does, the growth runway is long. If it doesn't, the stock can react quickly. The third thing, valuation. Alphabet has had a massive run this year, somewhere around 50 to 55%. That's incredible, but it also means the stock is no longer cheap. It's priced for excellence. Not disaster, not even normal excellence. As investors, we need to ask, is the stock pricing in the future too aggressively? If you're long-term, that might not matter. But short-term traders may find the risk-reward less attractive. Moving on, number 4, Alphabet is spending a lot of money. Capital expenditures are high because they're investing in data centers, AI infrastructure, and hardware. Long-term, that's smart. Short-term, it can hurt margins and free cash flow. If the economy slows more than expected, those investments become a drag. But if growth continues, these investments create a moat that few companies can pierce. Then, of course, there's risk. This is our 5th point. Alphabet faces intense competition from Microsoft, Amazon, Nvidia, and others in the AI and cloud space. They're also dealing with global regulatory pressure. When regulators look at big tech, Alphabet is always on the list. Antitrust rulings, privacy rules, ad tech regulations, any one of those could impact the business. Even if the company executes perfectly, outside forces can still affect the stock. Number 6 is analyst sentiment. Most analysts are still bullish. Price targets are generally positive, but interestingly, many of them aren't dramatically above the current stock price. That means analysts love the business, but also acknowledge the stock has already run pretty far. Investors should understand that the upside might be more moderate in the short term unless a major catalyst appears. So, number 7, what should you be watching? Keep your eye on AI monetization. Are their models bringing in real revenue? Watch cloud growth, especially enterprise adoption. Track regulatory headlines they move this stock. And of course, monitor global ad spend trends. Advertising is still Alphabet's core engine. If the economy slows down, ad budgets get cut, and Alphabet feels it quickly. Tying it all together, Alphabet remains a strong business with strong fundamentals. But the question isn't, is Alphabet great? The question is Alphabet great at this price? The company is positioned well for the future, but the valuation isn't cheap, the risks are real, and the expectations are high. If you're long-term, this might still be a great opportunity. If you're short-term or risk-averse, timing matters a lot more. If you found this breakdown helpful, hit that like button, subscribe, and turn on notifications so you don't miss future updates. Drop a comment. Are you buying Google right now? Are you bullish on Alphabet's AI future? I'd love to hear your thoughts. Thanks for watching. Stay informed, stay curious, and I'll see you in the next video.